starting. Now you can go.
Thanks for tuning in for Investment Insights. So I appreciate your time today. We have a couple of fun facts to talk about today. This is a good one. January is the best time of year for gym owners. You all come in, it's great, and then by Valentine's Day, you're not coming anymore. I already told Bill that earlier. Dave encouraged. That really is true. You know, I work at the rec center, and yesterday I was swimming, and there wasn't a single lane open in the pool, and people were sharing lanes. But you come about February or March, things will start to taper off a little bit, you know, so that's an interesting thing there. Behind every stock is a company. Find out what it's doing. Peter Lynch. You know, I think the last few days have been very telling because we've seen assets like GameStop and Bitcoin, these companies, AMC movie theaters, that aren't very good companies, drop just so dramatically in the last 7 or 8 days because the actual business model of these companies really doesn't work anymore. So why would the stock price go up? And that's the big thing. When you own an investment, you know, if you own Ford Motor Company and they're coming up with a new electric truck that is going to cost about $50,000 and have about 700 pound horsepower, and I think it's 400 or 500 pounds of torque, and cost 50 grand and get almost 400 miles on a charge, that's a good product. If that actually happens, which is that plant they're building in Memphis is to build those trucks, you know, when you're spending billions of dollars on a factory, you got to believe they probably think it's going to what? It's going to work. That's a product. And that's what you really want to own as an investor. You want to own something. Compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. Albert Einstein. One of the best quotes about money. And it really is true because, you know, you guys here, pretty much everybody here has been an investor. And you see how when you make, you know, if you make 10% on $100, it's $10. You make 10% on $1 million, it's 100 grand. And it works the opposite way when it goes down too, you know. But makes the bigger moves. This is one of my favorite ones. Formal education will make you a living. Self-education will make you a future. Formal education will make you a living. Self-education will make you a future. Jim Rohn, because you know there's a lot of people that are educated in our country, but they're not really educated. They've got a formal education, but they don't really have a. Well, anyway, that's what I had for fun facts today. We're talking a little about donor license. Anything you guys want to talk about is great. What I had to talk about today is, you know, what's going on with the Federal Reserve, how 2022 is going to look like, and then a market update. And then also, you know, we did a big rebalance on your portfolios with us last week. And so what did we do in that rebalance? So today as we're talking, Jerome Powell from the Federal Reserve is about to speak. Or he is speaking, he might be speaking now, but he speaks this morning. And so we talked about the most powerful person on earth is not a president of a country, it's really this guy right here. And if you guys noticed, last evening, the second in command of the Fed Vice Chair, Clarida, he resigned. You know, he got caught when COVID was hitting, selling his stocks before everyone really knew how bad COVID was, and buying stocks when the market had dropped, right before the Federal Reserve bailed him out. So he, 3 of the 7 permanent Federal Reserve board members were caught buying and selling stocks in a way that it's a little questionable. You know, if you know that bowling, for instance, was going to get a bailout, and you're buying the stock the day before that's announced, I think that should probably be illegal, right? But oddly enough, for Federal Reserve people, it's not been illegal in the past. So it's interesting how, you know, it's funny. I always hear people say politicians make too much money, and I disagree with them. I don't think they make enough money. Because if you want an honest politician, you don't pay him $175,000 a year to watch a $4 trillion budget. You think about that, right? You got 435 people in Congress, and you're paying, well, 535 if you count the Senate. You got 535 people, and you're paying about 200 grand a year to watch $4 trillion. Is it a big surprise they would try to make some other money some other way? Right? I mean, think about that. I mean, if you want to get an honest politician, you probably need to pay them a couple $1 million a year so that they're not owned by somebody else. That's my personal view. I mean, just think about this, right? If you want to run for Congress here in Coffee County, anybody know what it would cost? Go run for 2 years? How much money you need to raise? Last campaign cycle was $8 million.
For Congress?
Uh-huh. 8 million. So Scott Desjardins, who's the representative where I live in McMinnville, he's probably would be the easiest Republican to knock off in the state. He's probably the easiest representative to knock off in the entire state. And he's in Raleigh County. But if you wanted to beat him, the last campaign cycle, you need 8 million to run with him. And if you want to beat him, you probably need 20. Now, why would somebody spend $20 million to get a $175,000 a year job? Think about it, right? This is not some big surprise. But anyway, I digress. Okay, so everyone's watching the Federal Reserve. And obviously, when we're looking at your investments here, the Federal Reserve makes a big difference. If you look at the left, everyone's wondering what they're going to do next. And we've been talking about this in Investment Insights since July of last year, that I felt like the Federal Reserve should raise rates last year and start calming, because I was worried about inflation. And now what is every Republican and Democrat worried about in Congress? Inflation, right? Now, it's funny because they don't say when they print more money to give money away, they're worried about inflation. But if you just print money, what does that do to the value of money? It goes down. It's simple logic, right? If I fill this room with bananas, how long do bananas last, guys, before they go bad? Maybe, right? So, is the price, if this room is full of bananas, is my price going to go up or down? So, Genesis back there, you're looking for, what was it you're looking for today? Cream cheese? Genesis has been complaining all morning because she couldn't find any cream cheese. And I guarantee you right now, if you have a new package of cream cheese, she will pay you $1 more than market price to get the cream cheese, at least. Maybe even $5 or $6, because there's no cream cheese, so supply and demand would say. I mean, she's told me she's gone to every store in Manchester, Food Lion, Walmart, Dollar General. She's looking for cream cheese. She can't find it. Now, we all know that Walmart's probably the cheapest place in Manchester to find cream cheese. And Dollar General is probably what? The most expensive. That shows you supply and demand, how it works. And we're seeing that with building materials. We're seeing that with cars. We're seeing that with new houses. We're seeing that with everything. And this is all connected to what the Federal Reserve is doing. So inflation, for the last 20 years, until last year, has been consistently below the 2% target the Federal Reserve wanted. Anybody want to guess why? Well, think of it this way, right? There's something called supply and demand. Are people having more babies right now or less? Have they been having less babies for 20 years? Yes. Think about this, right? So, outside of me, how many families do you know that have more than 2 kids? What's that?
Yes, I know that you do.
Yeah, but the thing about it is, there's not very many. I mean, I tell you, you want to look weird? Walk with me in an airport with all my kids. People will look at you like you're a freak. And that wasn't true 40 years ago. And so, when you think about one of the main reasons why in the 1980s we saw really high interest rates was all these people were getting out of school, they're getting out of high school, they're getting jobs. They go to get jobs. That creates lots of demand. They want a house. I don't know about you, I love my parents, but I don't want to live in a house ever again. And that was true for probably all you all here. Do you know why? Because none of you live with your parents now. If they're not alive, but I'm saying is that's how it goes. And so that creates demand. And then back in the 80s, there wasn't much money. So there's not that much money. There's lots of demand. Our country's debt was lower, 50% of what it is today, relative to our economy. And so there's no supply, there's lots of demand. So what did rates do? Now, there's lots of money, and there's not as much demand. But some of that demand's changed because of COVID. And so that's why we've seen it for the last 20 years. And I believe one of the main reasons why inflation's been low the last 20 years is because of demographics. And you think about like right now, even though, U.S. immigration had dropped for the last 4 years. And so what can people not find now? If you're not having kids, who's going to do the job? Genesis.
Just a point, Brett. About 2.35 kids, children per family is required to keep a steady level of people.
Yeah.
In other words, you have an attrition. If it's in the U.S. General population, they're less than 2.35. Guess what? Dying out.
Yeah. Well, and the only way to fix that is you have to bring in immigrants.
Yep.
That's the only way to fix it. And so when you look at inflation, supply and demand, Brent was talking to me this morning about a couple stopping him yesterday when he was walking, or maybe it was this morning, from New York, looking at moving here. Because of supply and demand. California had the first year on record they have less people in California than they did the previous year in like 30 or 40 years. And where are they moving? Yeah. And so they're moving here. And when they move here, they're going to cause the price of what happened here. Because there's lots of demand and lots of supply. Now, the same reason why Ford Motor Company is moving into Memphis is electric rates are too high in Michigan. They're 3 times what they are here, and it's cheaper to build here. So what's happening? Demand's up, supply's low. So guess what's going to happen all around Memphis to housing prices? They have not done as well as our prices. Guess what's going to start changing? They're going to start moving up. And so we keep seeing that. So when we look at inflation, in January of last year, nobody was worried about inflation. Nobody even thought it was an issue. Now I will tell you, we bought hedged bonds in your portfolio in September of 2020 and all of our non-IRAs in January 2020. In January 2020, inflation, or 21, was 1.4%. In November of last year, it was 6.8%. Now remember, for the last 20 years, inflation's been below 2%. And in November, we're at 6.8. And they expect the reading in December to be over 7%. I'd say we're probably going to be surprised. It's probably going to be worse than people think. It's probably going to be closer to 8. That's my opinion. But we'll see.
So if you're earning less than 7%, you're going in the hole.
For that month, on average. So that's pushed out 12 months. So the average inflation reading for the United States last year was coming in at 4 to 5%. Now they don't include 2 items. What they are? Food and gas prices.
Oh, gee.
Which is stupid because the 2 items that everyone needs is food and gas. I want to talk about food. What's going on with food in a little bit too, because there's some really interesting things going on with food that really are interesting for the country and investments in general. And so the Federal Reserve right now has kept interest rates at 0 to 0.25% since the pandemic started. What they said last week that spooked the market was they're going to be more aggressive with inflation. In order to get this number down, what do you have to do? You've got to start burning money. Instead of printing money, you've got to pull money what? Out of the system. And the question the stock market's asking is, what does that mean for the economy? And that's the big question everybody's got to decide here today when your investments is what does that mean for the economy? But they're going to start raising interest rates to try to bring down inflation. So how does this work? Well, let's be honest, right? When most people buy a home, what question do they ask? Nope. What's the payment? When people go buy a car, what do they ask? It's funny because you go to a car dealership, they're like, they started doing 7 and 8 year car loans. Oh my God, an 8-year car loan? And I always go in, I'm like, well, how much does it cost? No, what's the payment? No, what's it cost for the car? Not the payment. What is the price of the car? Because most people are trained, and said they were mortgages. So when you say interest rates are 2% on a mortgage, and you buy a $200,000 house, what's that, $4,000 a year in interest? $350, roughly? I'm a little off, it's like 340 something, but it's close. And then your mortgage payment, $200,300, so it's about $300 a month for mortgage, for principal. 360 times 300, it's somewhere around 90, 80. So your payment is like $600 a month for a $200,000 house. But see, when I was a kid, and my parents bought a $250,000 house, and interest rates were 6%, their payment was $1,200 a month. Now, can you rent a house for $600 a month? No. So people are looking at houses and saying, 200 grand is cheap. Even if it's a 1,200 or 1,400 square foot house. That used to be $90,000 in Manchester. Because they're not looking at what it costs, they're looking at the what? The payment. So when you start increasing this rate, what do the payments start doing? Go up. So what does the price of homes start doing? Go down. Payments go up, price of home goes down. Because people aren't looking at what the house costs, they're just looking at what? The payment. So for them to be able to afford the house, the price of the house has to what? Drop. And that pulls money out of the system. That's because then it slows down the housing boom. It slows down when houses get, and it also slows down people coming here from New York, right? Because they can't sell their house for as much money, so they can't buy the house here for what? As much money. You know, California, this morning, they got a over $45 billion budget surplus. But rather than use that money to pay off their debt or to do smart things with that money, they're going to spend it on more government programs. 2 years ago, actually a year ago, California had to get bailed out by the federal government through part of our stimulus bill because they were out of money. Rather than save the money for a rainy day or use their money wisely, they're going to spend all of it. Now, Tennessee, what do? When we get extra money, we put part of it back for the rainy day because we know something bad is going to happen. That was one of the biggest things when they did the stimulus bill last year, is they gave money to New York, California, Illinois. And now they have extra money, but what are they going to do with it? They're not going to be smart with it, which means Tennessee is going to continue to be more attractive as a state, right? Because whenever things go bad, Tennessee can write a check to build a factory in Memphis. It's going to be harder and harder for California and Illinois and New York to do that. But anyway, that's how it works. And so, this also affects U.S. stocks, right? Because what do you guys think? What's a safer investment? The U.S. federal government or U.S. companies? U.S. government, right? Because the U.S. government has the right to take away all the companies in America. They can come seize them. So when the interest rate for the government goes up, guess what Apple has to pay? Maybe not Apple, we're going to talk about that in a second. But other companies have to pay more too, right? Because as the U.S. government is considered the safest rate. So if U.S. treasuries are at 1.8% for 10 years, then most U.S. corporations are probably going to pay 3% for 10 years. Because there's a higher risk that Dollar General goes out of business than the U.S. government goes out of business. And by the way, if the U.S. government goes out of business, guess who else is going out of business? Dollar General. Because the companies will go with them. Especially companies that are mainly based in the United States. Right? Because how many Dollar Generals have they got in China? None. I'm sure. I don't know. They might start another operation. I don't know what they have. And so when we look at this, this is why the Federal Reserve matters so much. It's because they're setting the tone for all these different things. You know, and now everybody cares about inflation, even though last year nobody, in the beginning of the year, would have cared about it. It's funny how as a country and society, we're so reactive. So there's a very strong possibility that inflation could be connected to supply shortages. And not necessarily, because are people having more babies? Are we having a lot more immigrants? Not really. So if they pull money out of the system, what's inflation probably going to do pretty quickly? It's it's going to start turning around. It's going to start going down. You know, because if, and this is a big if the supply shortages start going away. Right? Because if, you know, unfortunately or fortunately, our country made the decision to make most of our stuff in China. China does not have a good vaccine. So how do they deal with COVID? They shut down. They shut down cities of 40 million people. They don't leave their house. I don't know if you guys saw this in a terrible video. They have people that violate the COVID rules. They march them through the street and throw stuff at them. Like a medieval times thing. You know, when they, you imagine like that guy stole something, so they started throwing apples on him and they sit in the stocks. Yeah. They drag them to their house, and you see these Chinese people, they're wearing white, and people are yelling at them, throwing them stuff. It's just like, they have a big spectacle. It's a totally different country than our country. I mean, somebody stole my credit card last night and was using it for, buying dog food, which I've got no dogs, so that's great. But, we're not going to throw them in the street and do anything to them, right? They're just going to find the next person to steal a credit card from. But in China, if you break a COVID rule, you go outside without a mask on, they're going to march through the street and throw stuff at you. And so that's a different culture. And so the reason why we have such supply shortages, one of the main reasons is because the way China deals with COVID. They shut down. And when their factories aren't working, we don't get our what? Our toys, our stuff. And then our country decided to give everybody a bunch of money. And they went out and they saved it for the rainy day. No, they did what California's doing. They spent it all. Now, I didn't, but most people did. And so that creates more demand with a lack of supply, which causes the price to what? So the first part of unwinding this is to reduce the amount of money in the economy. And so that is what happened last Monday. So last Monday, last Monday was a pretty good day. Last Tuesday, the Federal Reserve indicated in their minutes that instead of this gradual, slowly raise rates, take it easy approach, they're going to be more aggressive. And they took that, instead of raising interest rates from 0 to 0.25 to at least 1% to 1.25% by the end of the year. Which, by the way, I'm just going to tell you is a huge overreaction. Because 1.25% of your money is still what? Terrible. I mean, if anybody comes to my office and says, I want to make 1% a year, they're probably in the wrong place. Just telling you, it's not a great way to make money. And so, but the stock market took this as a negative. And they're trying to, but the market's trying to figure out, is the economy strong enough to stand on its own merits? Or is the economy strong because of all this money they've printed? Now, my viewpoint is, and we'll talk about this in a second, I think the companies are strong to stand on their own merits. But nobody knows for sure. So until we know that, what's going to happen? Stock market's probably going to drop. I mean, because what does the stock market hate more than anything? Uncertainty. They hate not knowing what's going to happen. Which no one knows what's going to happen in life. That's the funny part. Nobody knows for sure what's going to happen. So let me give you guys I forgot one fun fact when I was talking too much. I don't know if you guys did this, but on Monday last week, Apple Computer Company, first company at $3 trillion market value. Came worth $3 trillion. Crazy how much money they make. But how has Apple done this? I don't know if you guys did this, but Apple, in the last 10 years, has bought back $467 billion of their stock. Now, one of the major ways U.S. companies increase their profits is they reduce the number of shares that are available. And when you do that, if there's less shares, like imagine this, I put $100 million in this room, and I start asking people to leave. No one's going to want to leave, right? But eventually, whoever stays, they're going to have more money. Same concept with companies. One of the major ways U.S. companies have reduced or increased their value the last 10 years is they've been buying their own stock back and paying out dividends. But why do companies not like paying dividends? Would you rather get a dividend in the mail, or would you rather get your money reinvested.
Reinvest it.
You know why? Because when they reinvest it, you don't have to pay taxes on it. When they give you a dividend, guess what you get to do? The company pay taxes, now you pay taxes. And so, one of the things that companies have done is, they're not paying out dividends as much because it's kind of stupid. Because if you want a dividend, just sell your stock when you want to. And if you make less than $106,000 a year, you don't even pay taxes on it. It's long-term capital gain. You know? But that's how that works there. So one of the things that with Apple is, Apple right now generates $104 billion in free cash flow a year. They are on the path to have more money in cash than they owe. Now, why would a company keep money in cash and still have debt? Anybody want to know why? Why would they do that? Well, let's say that they get this inflation thing wrong. And I just got a 30-year mortgage on my house, and I put my office memo with it too, which is at 4.5% at 2.75. And let's say inflation keeps coming in at 6.87%. Did they just pay me to borrow money? Yeah, they did. They just paid me because my home will appreciate if inflation goes up 7% a year. It'll appreciate 7% a year. And I'm only paying interest on what? 2.75. And I get to write it off on my taxes. So I'm really only paying what? A little bit over almost 2%. And inflation 7%. They paid me 5% a year to what? Borrow money. Now, was the goal of the stimulus to help Brett McKay out? That's not what they told me when they were talking politically. Was that what they did? Yeah, of course what they did. And that shows you how stupid they really can be. Kimberly, I'm going to pass these out. Bill?
I got a question for you.
Yeah, Frank.
I asked this financial advisor about a year ago in September about buying a used truck.
Yeah.
He said, wait until June of 2021 because the market will be flooded with those people that got stimulus money.
Yep.
Tell me what's happened to the truck market.
It's going up.
The price has gone up.
Yeah. There you
So
go.
I couldn't buy a truck. I was going to...
Well, it goes back to this.
A used truck.
Well, the issue with they gave more stimulus, right?
Yeah.
That was the issue. That's the issue is if you look at our country, there's a petition right now to pay everybody in the country $2,000 a month. With 3 million people have signed on to it. Okay? In California's budget, there's lots of stuff like that. And the hard part to figure out is if we keep giving money away, which by the way, the government does not generate wealth. They take it from somebody and give it to somebody else. So they keep printing money. What are they doing to money? They're actually making the people that own real estate and stocks wealthier at the expense of the people that can barely get by because it's more expensive for them to live. I mean, everyone in this room here, except for Kimberly and Genesis, own a house. Right? And your house has gotten how much more expensive in the last year?
Almost double.
Yeah. So how hard is it for them to buy a house? Now, did they give a lot of people in this room all that stimulus money? They did not give them as much as other people. And so what they've done is they've given people $600, and now it costs twice as much to buy a house. They didn't give you anything. They devalued the money and gave it to people that have stocks and real estate. Which, look, our office is one of the biggest beneficiaries because you guys have all made money in that policy. But that policy was supposed to help people that weren't doing well. Did not work. It won't work. It's impossible. And so, when it comes to used cars, the issue with used cars is very simple. Supply and demand. The chip shortage, because, and this goes back to China, right? I don't want to talk about China, we're talking about China more. Is Taiwan is the largest manufacturer of chips in the world. They make 70% of every computer chip in the world. In the country of what? Taiwan, or Formosa. If you guys know history, the country was Formosa. It's been traded between the Koreans and the Japanese. I'm not going to, I almost made a bad comment. It's been traded around a lot. Okay? And so, now that, guess who the largest investor, who makes your iPhone? You guys know who makes it? What company it is? It's Apple, but who actually makes the phone? Foxconn. Foxconn is a Taiwanese company that builds them in what country? China. So these Taiwanese chip makers had planned on expanding all their chip making facilities in what country? China. Then President Trump, when he was president, caught the Chinese reverse engineering their microchips to have a listening part on every phone in the United States. So what did they ban from phones in the United States? Chinese chips. But guess where Taiwan was building all those factories that built the chips that we would have had for more cars? In China. And now they're banned from where? Europe and the United States. So you want to know why you can't get a car? It's because the Chinese government made a decision to militarize microchips. And now they're flying planes over Taiwan trying to what? Intimidate or invade them. So guess what Taiwan's doing? They're building a chip factory in Arizona. They're building one in Germany. They're building one in Japan. Because you know what they know is coming? A war. And when they come after them, just like your money, do you want all your money? If you're Taiwanese, what would you be doing if you're a rich person in Taiwan? I'd be looking for houses in America. Right? Because when they blockade the place and start bombing me, I would like to have my family in somewhere like Tennessee. Now, so that's why there's a chip shortage. It's not because these companies weren't ready, it's because China made a decision. And all the companies in the world are trying to move business out of China. There's only one problem. You know what that is? There's 1 billion people in China. There's a lot of workers there. There's not enough workers in Africa, South America, and the United States to cover those people. So a lot of those factories are going to Laos, Cambodia, Vietnam, which are also really close to what? The Yangtze River, which is, if you guys remember, Douglas MacArthur wanted to nuke the entire river so that it'd kill off all population on the Yellow River between North Korea. They're actually, those rivers, they're floating factories down. Stupid North Korea didn't got it figured out. North Korea can make a lot of money right now. They could actually open up and they could make some money. But they're floating factories all the way down to move them. The problem is they're not moving them away from China far enough, right? If we go to war and there's a naval blockade, there's going to be an issue. So that's why you're having issues with these cars. It's all related to decision. Now, I thought that was the right decision to block Chinese chips.
Yeah.
I don't want them listening to every one of my phone calls. The government already does in the United States. I don't want the Chinese listening to it too. Yeah, go ahead, John.
I was just going to say, I was talking to a friend of mine that works in a Nissan plant.
Yeah.
He said people aren't looking to the fact that electric cars take like 10
That's
times the number of chips than a regular car takes.
Well, that's true too, because if
They're
you
not going to be able to get it.
no, and that's the other thing too is another thing is we talked about this at the previous meeting is if you look at a Tesla, which I don't own one, but I've been in one before. Wow, it's like a huge iPad. So you get my Nissan over there. I mean, I got the same warning message since I bought the car. I can't get off the thing. Okay, and every morning it drives me crazy, but they can't get it fixed. So I can either trade a car in or I just deal with it. So I deal with it because it's paid off and it's got a few dings and I don't care, right? But my car is gas, it's easy. But electric cars, I mean, they park themselves. I mean, there was one guy talking about mining Bitcoin with his Tesla at night. I mean, they're doing things that aren't standard operating procedures. The problem is, like John said, everyone's switching to electric cars. Ford's building a new factory, everybody stuff, and there's not enough chips. And there's not going to be for a while, right? Because I don't know if you guys knew this, but I grew up in St. Louis. And where I grew up, there's this river. It's called the Missouri River. You guys ever heard of that river before? Yeah. It's quite a large river. And the town I grew up in St. Charles County, that county has about 1 million people in it. It's about as big as it's bigger than the city of St. Louis, because everybody's been out to sea. And 70% of the water for the city, for the St. Charles County where I grew up, is used for one plant. And they make wafers for microchips. 70% of the water for the entire plant. So more than all the people in the United States, and the million people drinking water is made just to make wafers for microchips. So another problem with microchips is, I don't know why they built a chip factory in Arizona. Because what does Arizona not have?
Water.
And they've been talking to them because Arizona promised them unlimited water for this plant to get the deal done. Now tell me how that's going to go bad.
How could they do that? They've had problems for 30 years in Arizona.
They think they got enough water for 50 years. And politicians look at things from except for Bill. I mean that Bill's the only one I've ever met. I mean that. They look at stuff like, we can get that new thing in now, but they don't think about what it's going to be like in 10 years. Because they're not going to be in office. The Arizona's governor, and he has one more term and he's done. He doesn't care. Right? That plant should have been built in somewhere near the Great Lakes. That's my opinion, my personal opinion. But anyway, let's go back to returns. So you guys put your chart up here. This shows you what the winners and losers were last year. I'm sorry it's a little small. As you guys see, what was the best investment last year? Commodities, right? Who wants to make 40% of your money almost? Right? Then commercial real estate. Then U.S. stocks. Then Europe, infrastructure stocks. Japan was a little bit, and then everything else in bonds. And China was the worst performing investment. Chinese stocks were the worst performing investments. Now, let's talk a little bit about how do we value stock. Okay, so when you look at stocks, everybody makes this thing. Well, the stock market had a good year last year, so surely the stock market's got to go down this year. But that's really kind of garbage talk, because that's just, like on a second Thursday, Scott Royal played for the Cardinals, hits 500. That doesn't mean anything. He didn't hit any better on Thursday than Tuesday. It's just random chance. And so when we look at investing, we got to look at something called the risk-free rate. So if you're going to make a decision between it's not about, investing is not about making money today, it's about making money long term. And so when you're looking as an investor, it's a big game of risk, right? Because you got to determine what risk you want to take at this point. If you decide to do nothing and you put your head in the sand, the world still moves. The earth still moves around. Regardless if I come to work today, the world's still going to change. It's going to get more competitive, it's going to get more aggressive. If you think that the safety that our country's enjoyed for the last 40 years is going to continue at the same level, it's not going to happen, because statistically, wars happen and things happen that are bad. And they'll happen again. We all know that, right? And so, we look at investing, the way you measure how well you're doing is what's called the risk-free rate. The risk-free rate is what I can invest money in today and earn absolutely no risk on it. What is that rate? Anybody know? No? Well, it is kind of negative, but I'll tell you why in a second. Well, the risk-free rate, I would think, would probably be the highest risk-free rate in this area would be in a Federal Credit Union CD for 1 year. It's going to be about 0.6%. Right? I haven't looked today, but I'm assuming it's close to it. But we know the Federal Reserve is probably going to raise rates 4 times this year to get inflation down. So we know the risk-free rate now is 0.6, but the credit union in about a year will probably pay 1.6% on their CD. You mark that down, Frank, see if I'm right. We'll see on the cards. That's a bit hard, but that's what the market thinks today. Now, something else changes, that can change how quickly? Right? What's the first thing the Federal Reserve is going to do if the economy starts going down? They're going to print money. They're going to lower that rate. Now, right now, they're saying they're going to raise it. But if Taiwan and China go to war tomorrow, guess what's going to change? It's going to change just like that. That's why when you buy 1-year CDs, you're crazy. If you're going to buy CDs, layer them. Buy 5 years, 4 years, and 3 years, and 2 years. Because nothing's more volatile than 1-year CD rate. You go from making nothing to making something to making nothing in a minute. Right? So when we're looking at investments, that's where we start. We look at the risk-free rate. The risk-free rate is 1.6% this year. That's where we're going to end the year at. So, this is what's crazy. So U.S. stocks went up 27% last year, right? But you know how much profits went up last year? We think it's going to be 45%. You guys hear me? U.S. companies made 45% more money last year than the year before. And the price only went up 27%. As we sit here today, even if the market had dropped the last 5 days, the stock market is actually cheaper today than it was a year ago from a profit standpoint. Because companies are making so much more money. Let's be honest, right? When things cost more, that means companies are charging what? More. So if inflation hits U.S. companies, they're the ones charging more for everything. You think the next iPhone is going to be cheaper than the last one? How about the Dollar General? Is Dollar General's prices going down?
No.
It's like $1.37. I think yesterday I was looking there for cashews, and dollar stuff is $1.30. You know, and now they're like, we were joking about cheese sticks with the customer yesterday. They used to give you 20 cheese sticks, now they give you 2, right? Same price, the container, package. That's inflation, right? But you're still buying them, so because you got to eat.
Brent, does anybody know how many Dollar General stores there are in the world?
No, how many?
16,000.
16,000?
I looked at that.
That's crazy. I thought there's that many in Manchester. Just kidding. So, anyway, when you look at valuation, how we value stocks, so this is the risk-free rate. How you value stock is the profit per year, profit growth, dividends, and share buybacks. Right? And then you can value some intangibles, like the Apple name is going to get a premium because it's Apple. The Bank of America name is going to get a premium because it's Bank of America. It's like if you have there's like this, hidden thing about people liking these premium names. So the S&P 500, we look at profit, dividends, and share buybacks, it's 8.18% before the decline this week. Mid-sized companies, 8.45. Small U.S. companies, 9%. European and Japanese stocks, 11.6%. Emerging markets, a little under 11%. Commodities are really hard to say what their price is because it depends on what inflation is. If inflation goes up, the price of corn is going to go up. The price of soybeans, the price of oil is going to go up. It's based on inflation. Oil is also going up because we are drilling 2 million barrels of oil less a day than we were 2 years ago. Well, less supply means higher price. And by the way, nobody wants to loan money for oil drill because what are they worried about? Electric cars. If all these car companies are making electric cars, why would you invest money in a 30-year oil well when in 10 years they may not be using it? And that pushes more money towards electric cars. And then you get commercial real estate. Commercial real estate is about 4.4% plus inflation or appreciation. Okay. So let's take today, over the next year, the risk-free rate is 1.6%. What's the most attractive investment there is right now? Based on profit. Nope. It's Europe and Japan. They're the most attractive investment because they haven't gone up as much as our market has. They're still relatively stable, and they've never really reopened. If COVID goes away this year, which is possible, or goes down, the new strand is not as supposed to be as bad. then this would be the big winners because they would probably reopen. But when you look at it from an investment standpoint, does it really matter if this rate goes up another 0.25%? When you're looking at 1.6 versus 8, that tells me I should take risk. If this was 8 and that was 5, I'm going to get more nervous, right? Because I'm not getting paid for my risk. But you're talking about a huge multiple. 1.6% versus 8 and 11%? Still cheap. And so, when we're looking at rebalancing your investments, which is what we did last week, and I'll just tell you straight up, what we did is we pulled money out of the stock market that we made a big chunk last year, and the market's dropped every day since we did it. And we reallocated the money based on who the losers were last year, right? Now, the one thing I will tell you is, and you'll notice a big change in your portfolios is, we changed our emerging market position. In the past, we owned a broad emerging market investment, which primarily consisted of Chinese stocks. And you'll see on your statement it says Colombia excluding China. And the reason why we did that is because China is doing some really weird things. Let me give you some examples. So there's a company called Evergrande. You guys heard of them? Last year, the gentleman that owned Evergrande was the second wealthiest man in China. He was worth over $50 billion. Today, he's bankrupt. He's lost every dollar he has. Last week, he built an island, artificial island called Flower Island in the ocean. He spent $13 billion on this island. You guys hear what I said? He built buildings like flower petals. They built 50 and 60-story towers on an amusement park. China ordered him to tear it all down last week. That is stupid. Who goes out and throws away $13 billion? Now, if you guys noticed this, but yesterday there was a report out, before I wrote this last week, that showed that Chinese raw land sales had dropped to a 40-year low. So when they buy land to develop new buildings, China has declared war on all their developers. All the people that build buildings and apartment complexes, all their wealthy people. Because they are trying to give people money from that aren't doing as well. So what are all the wealthy Chinese developers doing? They're trying to find a way to where to put their money. They're trying to leave, they're screwed, right? Because if you have all your money in Chinese real estate and the Chinese government starts taking it over, guess what your money's going to do? It's all going to be gone. That's pretty what? Stupid. Because if you took everybody who had to build a house in Manchester and you shot them, you want me to build your house? You don't. Okay? And so, China, this is one guy. Another guy is named Jack Ma. You know Jack Ma? He started a company called Alibaba. He's got a famous thing called Singles Day. Single Days is the biggest shopping day around the globe. It's for people that aren't married, don't have kids, and they buy themselves a gift. You could also call it Selfish Day. Right? It's even Amazon's. Okay, so last year, Alibaba was worth $857 billion. Ant Group, a technology company he started, was worth $470 billion. We made some comments about the Chinese government not being the best in the world. And so guess what they did to him? Well, first off, they arrested him. They took him somewhere for a while. And by the way, his companies, which were worth $1.3 trillion, are now worth $696 billion. He's lost almost half his wealth. So this tells me that what is China doing? They're declaring war on all their rich people. And so, another thing China started doing last year, which is very interesting, is they started hoarding food. You guys don't want to go to the grocery store, they cost more? It's their fault. Partially. It's our fault for printing money, and it's their fault because they're hoarding food right now. Give you an example. Right now, China holds 69% of all the corn in the world that's in reserve. Only 20% of people live in China. And they have almost 70% of all the corn. They have 60% of all the rice in the world in reserve. And 51% of the world's wheat in reserve. Now, one of the biggest wheat producers is Russia, north of them. But guess who makes most of their corn? Guess who makes most of their soybeans? Their rice. And all of a sudden now they're storing it. Why would they want to do that? Huh? Yeah, why would you need to feed all those people? If you what? Went to war with somebody, right? I mean, if you decide to bomb Taiwan, what's the U.S. military going to do? They're going to blockade the Navy. Is going to blockade the Pacific Ocean. Once you do that, they can't get what? Food. So why would we start storing food? These are weird things to do, right? Why would you start storing more food now? You know, it's a little different, right? It's a little creepy. And so China's been flying over 40 planes over Taiwan at certain points in the day. So I'm not saying that China, the United States, Taiwan are in a war today, but as an investor, is it really prudent right now to be putting a bunch of money into a country that people are leaving and that they're taking on people with money? I don't think it's a good investment. And maybe I'm wrong. Maybe this year China will come through and maybe we made a huge mistake.
Rick?
Yeah.
Let's think about what you just said.
Yeah.
The percentage of rich people in China is probably a small percentage as the total populace.
Sure.
So the Chinese government is trying to peanut butter spread the wealth. The way I'm looking at what you're saying, peanut butter spread the wealth. So they don't have an insurrection, a revolution in the country because of the poor people.
That's not what happens though, because if you look at it, Frank, if you look at before they instituted capitalism in the 70s, they couldn't feed the people.
That's true.
And so they were all dying. And now they're responding by taking all the people that have money and taking their money away. That actually, think about this. All the developers who build these, where do all these poor people live?
In those high-rises.
In those high rises. And now the people building them have decided they're not going to do what? They're not building anymore. So imagine if how your house goes, right? As your house gets older, what happens to it? It declines. It goes down. We go to California, right? I love California, but if you go to Santa Monica, when I was going to college there, they wouldn't let them build new stuff. So everyone had built in the 70s. And so they were all rut. They smelled bad. They're rough. You know, I grew up in Missouri where everything was new, because I grew up in a town that was 4,000 people, it's 100. You know, it just, you know, beautiful, but old. Now they're letting them build again. And so China is instituting policies right now that won't work. Because the only way, in my opinion, to cause the middle class to grow up is for them to have skills, better skills. You can't make somebody rich. We're proving that in our country, right? We're giving everybody money. How many people that win the lottery join the Fortune 500 list? Ever seen that happen? I've never seen that happen. So you won $500 million and yet you're not a billionaire. What does that tell you about giving people money? It's like, you know, if my kids don't work hard, I don't want to give them money because guess what? It will be gone as quickly as they got it. And so when you're looking at the policies that China's undertaking as an investor, it's weird to be hoarding food. Is that weird? Yeah, John.
I also read that China's buying American farms like crazy.
Yeah.
So do they think they'll still be able to farm those farms if they go into conflict?
I don't know. I mean, to me, that's a positive. They bought Smithfield Foods, which makes most of our bacon and pork. And of course, the Chinese love pork. But it's weird. It's a weird place to do business. You know, Hong Kong, which was an open business where most American business would funnel money through, would be through Hong Kong. I mean, they don't even get to pick their people anymore. They have to be communists. They're taking over the country. You know, and so what's happening is, and then now Chinese people that are wealthy can't pull money out of the country. You know, when I went to France this summer, we went to a French winery where they actually have the family that owns it is from Hong Kong. They took all their money out of Hong Kong they could, and they moved it to France before the British turned over control to the Chinese. Because what were they smart in doing? They knew what was going to happen. So that, you know, the second, you know, the largest foreign-born people in California are Hispanic people. Second are Chinese people. Because if you're born in California, you get free college and you get basically free American citizenship. And so these are wealthy Chinese people that are flying to California to have their baby so that they get American citizenship and they're in California to get free school. They're doing it for two reasons, right? Because if they have to leave China, where can they go? California. You know? And so, but this kind of stuff is, as an investor, even though the Chinese stock market has gotten cheaper, it really is a dangerous place to do business right now. It's a dangerous place to do business because we don't know what's going to happen. You know, and so, and the stock market's reacting accordingly. I mean, only investment that lost a ton of money last year is Chinese stocks. Down 21%. Right? So I'm not the only one figuring this out, right? This is a global thing. And so that is the issue there. So now what is looking really good, right? If you think of it this way, one of the things we also bought, we bought more small and US-sized companies because they've gotten cheaper. Usually, small and mid-sized US companies trade at about 20 to 25 times profits. They trade at 15 times profit right now. So there's a lot of cool opportunities this year. Ultimately, the biggest thing to understand is, even though the stock market had a record year last year, the stock market profit levels have gone up to such a level that it actually justified the year the market had last year. Now, we don't know what this year's going to look like, but if there is a tantrum over rates going up, it's probably going to be short-lived for the stock market. If profits continue to be this good, the stock market really can't stay down, right? Because the profits will win in the end. And so that's what we're seeing this year. But this movement to move money out of China is gaining steam. You know, if Donald Trump, when he's president, a lot of times, you know, people look at the president like, man, what are they doing right now? But presidents have more impact years after they're in office than they do the year in. If you think about the financial crisis that happened in 2008, a lot of people blame that on Bill Clinton and the Republican Congress in 1997 when they let big investment banks happen. They were illegal until then, basically. But that really didn't hurt anybody until President Bush and Obama were president in 2008, right? It really affected them more than people around. Well, the labor shortage we have in our country, I think, is clearly related to immigration. I think it's clearly a problem because there's not enough people to work. So that's an issue. Because we've all known the birth rate's been going down more than 4 or 5 years. So why all of a sudden are there not anybody to work anymore? Well, it's only one thing that's changed. You take out all the variables and move one variable, you know what's happened. Right? And the same thing's happening with these chips and these factories. Is what happened when they found the Chinese reverse engineering these chips with stuff on them is these chip companies, and Taiwan owns them all, right? Taiwan's the biggest producer. So if you're Taiwan and they're flying planes over your head trying to bomb you, what are you thinking? Where do I take my money where I can be safe? Right? Because everybody knows that if Taiwan and China went head-to-head, just one-on-one, China's going to win. If the United States doesn't do anything, China's going to win. Now, the Japanese are sitting over here, right? What are they thinking? Remember when we invaded China last time? They're still kind of pissed about what we did to them. So if we let the Chinese take Taiwan, we got one less friend. So what are the Japanese thinking? And they know this. The Japanese just turned their helicopter aircraft carriers into aircraft carriers. You know, you look at this Right there, that's my grandfather's flag in Arizona, because he fought the Japanese in World War II. They weren't allowed to have an aircraft carrier after what they did in World War II. What do they have today? Aircraft carriers. So I'm telling you, all this stuff is happening. As investors, though, it doesn't. I mean, the stock market's gone through conflicts before, and there's ways to make money on them, right or wrong. But all these things seem to be pointing towards. John, it's good if China invests money in our country. On one hand, it's a good thing because they don't want to lose that money. And the whole idea with the American economy after World War II is the reason why Germany and Japan, the reason why they blew each other up, is because the only thing we sold to Japan basically in the 40s was oil. And when Roosevelt stopped selling oil, what did they do? They blew up Pearl Harbor. Because they needed the oil. And so, after World War II, our grandfathers, or my grandfather, your parents, they made the decision that, the best thing to do is let's all invest with each other so we never kill each other again. We'll put all our money in Germany. Germany will put money in Chattanooga. We'll buy BMWs. They'll buy US, Coca-Colas, and we'll never kill each other again. And that's pretty much true. But right now, what we're seeing in China is this investment relationship is starting to what? Chinese companies are delisting in New York. They're not being listed in New York anymore. U.S. companies are moving factories to Vietnam, Malaysia, and Laos and Cambodia are getting Bitcoin mining places because of all the water they have. Remember what Nixon did to Laos and Cambodia? He bombed them. And Vietnam too. Vietnam's buying U.S. military planes. This is crazy how the world works, right? And so, but what's interesting as investors is, to me, there's a huge opportunity in emerging markets outside of China, right? Because all these businesses move from China, they're not probably coming where? Here. Where are they going to go?
Maybe cheap labor.
Cheap labor. Vietnam, Laos, and Cambodia. And so in our emerging market investment, to me, those markets are so much cheaper and a better opportunity than China's right now. Because the same boom they got when China embraced capitalism, now these other countries are starting to embrace it. And they're going to start getting what? They're going to start getting rich. And that's what's going to happen. So that's pretty much the investment strategy for this year. I know I didn't go over a lot of it, but I got to try that. And then also, we still have our hedged bonds for inflation. The one caveat and the one thing that our government and our Federal Reserve might be missing, and I think they probably are missing it, is a lot of this inflation is related to shortages. And it's going to take a long time to get those factories built in countries outside of China. It's going to take a long time to get that production back up to speed. Now, what our country should be doing is investing money in South America, because there's lots of people that don't make a lot of money. And you got a lot of issues with crime and drugs and stuff that we can help fix. Because if investors would invest there, they would help clean those areas up. And they're doing some of that, but not enough. And so, but as investors, this presents an incredible opportunity, because this money is going to move out of China. And it's not going to necessarily come here, but it's probably going to go to Vietnam. It's probably going to go to Malaysia. It's probably going to go to Indonesia. But also from a U.S. military standpoint, isn't it much easier to have your money spread out between a bunch of countries versus one communist country that wants to kill you? Because no matter what, China's made it very clear they want to be number one. They don't want to be number two. And so that's what we're going to see as investors. But I feel like even if there's never a conflict between Taiwan and China, that this conflict between the United States, the way we do business, the way China does business, is going to be a constant theme for many years for our country and as us as investors. And so that's what we're looking at from that standpoint. Any questions about this?
I've got a question.
Yeah.
And a thought comment. Talk about Chinese companies investing over here, buying land, buying factories and stuff. When we fell out with Iran, we froze all their assets.
Yes.
Will we not do the same thing with China?
That's what Don was saying, yes.
Oh, I must miss, I was
Yeah, yeah.
asleep.
No, that's the same exact thing, and so that's, if you look at Iran, the tragedy of the oil issues in the 70s is connected to the Iranian issue because the U.S. had planned on investing tons of money in Iran, and then when we didn't have the oil, we were out of supply, and then we saw inflation, and we're seeing that same thing today. It may not be as big of it may be even worse because it's more broad. Because in Iran it was just oil.
Right.
In China they make
Everything.
And so it's very hard. But on the good news, the Chinese got to realize, I don't know about you guys, but I'm not shooting my clients. So if you go out there and you shoot us, then you can't sell us stuff. Well, if you can't sell us stuff, how are you guys going to eat? And they're storing food. So I guess one theory would be you go to war hoping that we give in quicker. But they don't really know Americans very well. Because Americans are pretty proud people too. We're not going to just let them walk all over. That's my opinion. Yeah.
It's Gary. He wants to know if you're going to touch base on Russia and the Ukraine that you mentioned something about it last month, and I was wondering if you had an update or thoughts to share.
Sure. So Russia and Ukraine, of course. If you guys had noticed, Kazakhstan, which is a country where it's one of the biggest 10 countries in the world. I can't remember what size it is. It's a big country. It's got about 20 million people in it. Well, a week ago, all of a sudden something happened in Kazakhstan where 200 cars caught on fire in the main city of Kazakhstan. And the military of government, the prime minister, he resigned. And then the Russian military flew in 140 planes in one day with military troops to go put down an uprising. And they started shooting everyone on the streets in Kazakhstan. We don't know how many people died because they turned the internet off for the country. I think it was on Saturday. And so it's crazy because no one really picked up on it. And then all of a sudden they're like, satellite imagery catches all these cars on fire. They're blowing their... So, I don't know about you, but if you have a protest where 200 cars catch on fire, there's more than 200 people there. And so, what happened is, of course, Biden and Putin are meeting up this week talking. But Russia, there's actually I'll read too much information. Russia has a propaganda network where they say positive stories about Ukraine when they're not going to war with them, and negative when they are. So all of a sudden this week, Russia started floating all these positive stories about Ukraine. And then Russian troops have started been reduced on the border. Because they're all going to Kazakhstan. And so, obviously, I don't agree with it, but it appears that our president made a deal with the Russians, and he said that we would not allow Ukraine to come into NATO. And they appear to be digressing their attentions. And so that's basically what happened with Ukraine and Russia. Obviously, one thing that's also helped is Russia sells almost all the natural gas they make to Europe. And it's been relatively warm in Europe, which means they use less what? Less gas. And so, when they use less gas, the price of gas does what? Well, Putin can't run his tanks if he doesn't have money. He has to use, this crazy part about it is, the Europeans in Germany, Ukraine, Poland, they send all this money to Russia, who Russia then in turn comes back and tries to kill them. And so it appears at the moment, as long as the winter doesn't get much colder, and as long as Kazakhstan stays where it is, that's probably not going to be a conflict in Ukraine today. But you never know with crazy islands, right? Because they can kind of change on a minute. The Russians have this long history. I love Russian history. It's one of my favorite things to read about. And so they have a very interesting history. They shouldn't really exist, but they're pretty tough. But that's basically a big there. Of course, if you don't know about Ukraine, Kiev, birthplace of the Rus. the Ukrainians, the Russians consider the Ukrainians to be the same people as Russians. The Ukrainians consider themselves to be separate, but genetically they're all Slavic people from the same group of people. So it's kind of like a brother-cousin fight thing. So, but that's the only update I have on that. So far, it doesn't look like it's going to affect us right now, but I guess you could thank or feel bad for the poor people of Kazakhstan because when they did a shoot-on-sight order last week, anybody outside, they gave the military the right to shoot them. So, pretty tough stuff. Anyway.
North Korea, they're doing the same thing with Christians.
Yeah. Well, actually, I mean, they make 60 or 70% of the uranium that goes for nuclear power plants is made in the country of Kazakhstan. So almost all uranium that you get globally comes from that country. Another issue is supply chains, right? You know, no one's thought about this little country of Kazakhstan. Or, you know, there's a country called Congo. Anybody heard of Congo before? Almost all the world's cobalt comes from Congo. Well, you know what you need to make electric cars? Cobalt. I think 90% comes from Congo. People in Congo are the poorest people on earth. And they have a resource that everyone in the world wants. And the only place in the world that pretty much has it. It's actually pretty cool. It's like blue. And so it's pretty cool that you can actually get cobalt rings and stuff. And so, but they're ruled by, there was an issue there too because the leader of power got shot and a new person came in. So there was an issue last week with uranium and cobalt because if you think about electric cars need nuclear power plants and they need lithium and cobalt. I'm way over. Thanks for tuning in today, guys. Have a great day.